Hello and welcome to Markets Today. I'm Lata Venkatesh and with me is Surabhi Upadhyay. Well, it was a day when the bears won yet again. Just for the first 1 hour, it appeared that the bulls have come back with a vengeance and come back with strength. The Nifty scaled 8,500, but it was a brief victory. And the Nifty thereafter just started declining very rapidly after the first hour of trade and ended yet again in the red. The small good news, however, came from some bank and non-bank results, which showed some control over bad loans. Hi, Surabhi.
Hi, Lata. Yes, at least the earnings weren't much of a disappointment today, as you said. Let's start with the headlines. A choppy day of trade with bears wrestling control by end of day. The Nifty falls 0.4%, ending just below the 8,400 mark. The Sensex loses 150 points. Cement, capital goods and pharma stocks saw selling pressure.
Mid-caps fare better, with the mid-cap index managing to close in the green. Cient, MRF and L&T Finance Holdings gain between 2 and 4% on good results. Gammon India closes up 7% as the company said it will raise 100 crore by issuing convertible debentures to its promoters.
HDFC Bank reports a stable quarter with profit rising 20% and net interest income growing 21%, both in line with estimates. Asset quality shows a slight improvement with gross NPAs coming in at 0.9% after the bank sold bad loans worth 500 crore rupees to asset reconstruction companies.
And L&T Finance and State Bank of Mysore surprised with a huge fall in bad loans. L&T Finance ends 4% higher, State Bank of Mysore 10.5% higher. Among the frontliners, Yes Bank ended with 7% gains after brokerages gave it a thumbs up for its post-quarter results. And separately, the bank allows more FII purchases of its shares. Well, those are some of the headlines, and here are the experts that we have lined up on the show for you. Jitendra Sriram, Managing Director and Head of Research at HSBC, joins in with his take on the earnings and the markets. From the currency space, Anant Narayan, Head of Financial Markets at Stanchart Bank, will tell us whether there is room for further declines in the rupee, and we'll also get you the managements of HDFC Bank and L&T Finance to talk about their quarterly earnings.
All right, but let's start first with the market action. There has been one constant on Dalal Street over the past few days, and that's volatility. Today, once again, markets saw some wild swings, and a late slide forced the bulls on the back foot once again. Anuj Singhal is now here with the day's trading action. Anuj, bulls one day, bears the other. Where are things headed?
Well, one thing is certain, we don't know whether the market is headed up or down, but it's going to be very volatile up until expiry. You probably only have seen the teaser for the volatility. Over the next 4 or 5 days, it's likely to inch up even further as we head towards expiry. It's been that kind of a series, and it looks like the expiry is also going to be like that. In today's trade, of course, it was quite volatile. The market ended at low point of the day, and that's quite important from the bulls' point of view. Every intraday rally was sold into in today's trade. Let's talk about some of the stocks that led the market decline. Right on top, some of the IT stocks. Tech Mahindra, that was the top loser, down 2.5%. Wipro was down 2% as well. And Infosys, a day ahead of its numbers, was down about close to 1%. Pharma stocks, that's the second pressure point for the market today. Sun Pharma, down 3%. Lupin was down 1.5%. And Dr. Reddy's as well, down about 1.5%. Cement stocks, in fact, cement has corrected quite a bit all through this month, and that continued today. So ACC, Ambuja, Ultratech, all lower by about 2.5%. Some other prominent Nifty losers included stocks like ONGC, that was down about 1.5%. Larsen & Toubro was down 1%, and KN India, ahead of its numbers, was down about 2%. On the gaining side, Yes Bank was your stock of the day. That stock reacting to numbers up 7%. The FI limit has been hiked as well. Tata Steel was up about 5%, and Z Entertainment was up about 2%. In the mid-cap side, it was quite mixed. It was a bit resilient compared to the large caps. So you had stocks like Man Infra that gained about 12%. But on the losing side, you had earnings reaction again. Cera Sanitaryware was down 16%, and Mastech was down about 6%. Tomorrow is the Infosys day. That's the last thing the traders would have needed if they didn't want any volatility. But tomorrow is going to be as volatile, if not more.
Thanks a lot for that, Anuj. Yes, fasten your seat belts. Aside from the bull-bear volatility, you are going to get Infosys, which usually engenders a fair amount of volatility after its results. Well, I just wanted to add a couple of things. In all this gloom of the markets losing steam from where 8,996 just in early March to almost coming to the 8,000 mark. There are small silver linings in an otherwise bleak economic sky, and those came in the form of lower bad loans reported by two entities. I mean, you don't count HDFC Bank in the NPL list. They don't know what are bad loans. But L&T Finance, which had once belabored with as high as 4% bad loans, now saw their bad loans falling to 3% in the last quarter itself, and in the quarter under review, it fell to something like 2.25%. So L&T Finance saw a rapid decline in its bad loans, and ditto for State Bank of Mysore. Bad loans falling from a tall 4% to less than 3%. So a 1 percentage point cut in bad loans. And for L&T Finance, it came also with a decent amount of loan growth, indicating that banks and NBFCs are daring to give loans and still being able to control the amount of bad loans. Probably this is the end of bad times for the financial world. Well, that said, time to get some market voices.
Absolutely, Lata. So let's get some opinion going. Jitendra Shriram, Managing Director and Head of Research at HSBC India, says the earnings cycle and capex recovery should drive market here on.
Two things that are going to be quite critical now. One is this earnings season, and up till now it has been reasonable, barring some hiccups on the IT side where we have had a little bit of stumbles. IMD forecast yesterday is going to be also equally critical because one bad monsoon probably we can handle, but also do be aware that the IMD has spoken of a 1/3 probability of it being a deficient year this time around. So as your updates start coming through, maybe month and a half down the line, and if there is two back-to-back really poor monsoons, then I guess it could be a little tough in terms of rural offtake, various other things, even in terms of the government response as such. Overall, on the defensive spectrum, I must confess that we are not as enthused by it, mainly because of the stock performance that these sectors have shown. Last year, after the initial euphoria, post-electoral verdict and so on, we have actually seen that the defensive spectrum of the market, which includes healthcare and IT, do exceedingly well. Part of it has also got to be the tailwind from the currency strength that the US dollar saw.
Okay. Well, shifting focus to earnings. HDFC Bank and L&T Finance reported fourth quarter numbers today. Let's cut across to Ekta Batra for the key trends. Ekta, HDFC Bank first, as good as gold, as always.
Well, it was another steady quarter for HDFC Bank that reported its Q4 numbers today. So the NII growth was 21%, the profit growth was 20%, which was in line with the street estimates. The provision spike, however, did come through, so that was a little bit of a negative. But if you look at it on a sequential basis, it came in quite flat, up around 3% on a sequential basis. However, on a year-on-year basis, the provision spiked over 100%. Now, in terms of the profits, it was supported by the other income, which is up around 28.1% on a year-on-year basis. That included your fee and commission income, etc. The asset quality, which was pretty much stable and has been for the past couple of quarters, so the gross NPA on an absolute basis was just about flat sequentially, and the net NPA was flat sequentially as well, with the gross NPA ratio coming in net of sell-offs at around 1% and with sell-offs at 0.9%. That was the reported gross NPL, which compares to around 1%. Net interest margins at 4.4 versus 4.4% sequentially. So that was maintained on a year-on-year as well as sequential basis. In fact, came in at the higher end of the range. The advances up 20.6%, picked up from the 17% growth last quarter, and versus estimates of 18 to 20% growth estimated this quarter. So overall, stable set of numbers. Let's listen in to the management.
The gross NPA number at 0.93 is a little lower. That's net of some sell-offs, but if you put that back, it's still about 1%, which is comparable to essentially the 1% that we had last year. We believe that in the recent past, the NIMs have remained in a tight range of about 4.1, 4.2 on the bottom and around 4.4, 4.5 at the top end. We'll clearly remain in that range. despite whatever changes that we might see in both deposit and base rates going forward.
Well, L&T Finance Holding numbers were better than street expectations due to the gross NPL or the asset quality parameters improving this quarter. But to start with the other parameters, the NII and profit were in line with estimates, with brokerage estimates that we were working with. The NII was up around 21-odd% for the quarter. The profit growth was around 10-odd%. The profit growth, in fact, was restricted to a growth of around 10-odd% due to the provisions that spiked up 70% year on year. However, that included accelerated provisions of around 96-odd crores. Focusing on the big parameter, it was the asset quality which saw a big improvement. So, for example, the gross NPA was down 76 basis points on a sequential basis. The management said strong collection efforts plus proactive call on certain stressed assets was the reason for the improvement. Other parameters such as the lending net interest margins were quite stable as well at around 5.68 versus 5.66% sequentially. So, good numbers from L&T Finance Holding in terms of asset quality. Let's listen in to the management.
So there has been a substantial improvement in the provision coverage, and in the retail business, it is more than 50% now. So as a result of which, and also because of tremendous efforts put in by our collection team, our non-performing assets, both gross and net, have dropped significantly in Q4, which is something in this environment is extremely creditable.
All right, that was L&T Finance Holdings. Let's talk about earnings that will come tomorrow. Infosys will be reporting its fourth quarter numbers. So far, all IT companies have disappointed the street, and Infosys is also expected to come out with a muted set of numbers. Rima Tendulkar is here with the details. Rima, what can we expect?
Well, you can expect a muted quarter from Infosys as well. So these are the key numbers to focus on. Dollar revenue growth is seen higher by 0.3% on a quarter-on-quarter basis at $2,224 million. But constant currency is what you should focus on because of the volatility that we've seen in the currency. It has negatively impacted all the IT companies' revenues and margins. So for Infosys, the expectation is that they'll deliver a constant currency growth of 2 to 2.5%. But all the peers, TCS, HCL, and Wipro, actually disappointed the street with its revenue and growth performance. On margins, they're seen lower on a quarter-on-quarter basis due to increased investments as well as the negative impact of currency. So EBIT margins are seen at 26%, and the weakness in margins flows through into the profitability as well. So profits, according to our poll, are down 2.5 to 3%. But the key to watch for will be the FY16 guidance. So currently, street expectations put it in either 9 to 11% or 10 to 12%. So anything within the 9 to 12% band will be in line with street expectations, but it will be lower than what the NASSCOM is guided for. And secondly, keep your eye out on the capital allocation policy. Unlikely that the management is going to give you big bang announcements on increasing dividend payout or a buyback, but they could give you a strategic direction on how the management will use the money for future acquisitions. They'd already done one, Panaya, a few months back. So some more clarity on cash utilization will be critical to watch. Back to you.
Thanks a lot for that, Rima. We'll watch out for those results with a hawk eye tomorrow. For the moment, let's turn our attention to the currency space. The rupee declined to a 3.5-month low on strong dollar demand, not only in India but world over, and weak sentiment, of course, in the equity markets, which are seeing FII outflows or FII selling. But is there room for further declines in the rupee? Let's hear out what Anant Narayan, head of financial markets at Standard Chartered Bank, had to say.
Dollar has strengthened globally. It's moved a lot sharply since the second half of last year, and the rupee has not kept pace. To that extent, the RER now indicates that rupee is 12% overvalued. Now, all this means is that whenever you have a domestic or a global event, we could be vulnerable to sharp moves on either side. And frankly, a 1 or 2% move is not large seen in this overall perspective.
Okay, that's a call on the currency. Time for a break now, but coming up on the other side, Sudarshan Sukhani joining in for a technical chat. We'll also get you some trading ideas.